Traders from around the world, what's going on? It's Jeremy Alexander Newsome with Real Life Trading. I'm doing absolutely fantastic and sensational. It is Friday, and I hope you have a lot of weekend plans. I have the opportunity of hopping down to Helen, Georgia with Ashley and Daniel and Domin and Derek, some of my family members, and we're going to run a half marathon, which is the Hog Pill Hill Climb. It's an 18K, and doing that in the remembrance of my father. It's something he talked about all the time. He made jokes about it. He said, if I could do the Hogpill Hill Climb, I can do anything. Because apparently it's one of the toughest races in America. It's entirely uphill. It's going to be about 29 degrees and raining. So it's going to be miserable. I'm going to do terrible. I'm probably going to look like a squirrel walking up an 18-mile hill carrying a 10-pound bag of peanuts. Is probably what I'm going to look like. It's going to be rough. But anyway, I'm going to give it my best. So let's talk about the week that just passed. Oh my goodness, what a week it was. Are you serious? Phenomenal. The biggest 4-day down movement of the beginning of a year in history. Yes, you heard me correct. In the first 4 days of a brand new year, this was the biggest movement down we have ever had in the markets in history. 4.9% down, and we're down a little bit farther today as it stands at the moment. So that would be about 5%. That's huge. And this week, coincidentally, was the week that we have a free trading room open house to the world for the morning day trading room and the afternoon swing trading room. And we did very, very well this week. And both of those, in my opinion anyway, just exited a 6R trade on Gap. It was a day trade, and shout outs to all the traders in the afternoon trading floor who helped make that happen. My hands were shaking because I was at 2, 3, 4R. I was like, oh man, I want to get out. They're like, no, stay in. And it ended up going to about 6.5 R's or so. Great trade. A lot of traders did very, very well today. And that's how the Monday was as well. So, Tuesday. Tuesday was like a 4R day. For a lot of traders. Anyways, it was a great week. Great time to spend with a lot of traders from all over the world. We had traders from Colombia, Uruguay, Australia, Taiwan, Japan. A lot of awesome traders joining us. That was fantastic. And again, just thanks to everyone who shared the apple and mustard video. Apparently you guys liked it so much, you and 3,000 other friends decided to view that already. So it's one of the biggest viewed videos that I have, which thanks, guys. Was great. Now, the good news is on that Apple trade, we did exit, we did unravel, and we are extremely profitable on that particular trade. So all's well that ends okay. And the trade is totally exited. Everything is fine. I know a lot of other people were bearish on Apple. It was actually very easy to be bearish on Apple once it broke that 105 mark. Didn't think it would happen, but it obviously did. So let's hop over to the charts. This will probably be my last long stock review because usually they're around 8 minutes or so. We got about 10, 15 more minutes left on this one easily. And I just want to review some 2016 thoughts, some specific stocks, and just kind of give you guys my overall view of the market. So let's hop over to the computer. We'll check out some charts. Thanks so much, guys, for watching this. I really appreciate it. Have a fantastic weekend. I'll update you next week on how this run is going to go. It's going to be rough. Anyway, see you guys later. You rock. And until next time, just go watch the video. All right, hopping over to the charts. These are the charts that we're going to look at today. And again, we're going to go a little bit longer than usual in this particular review. Just kind of give you guys some perspective of what I got going on and what my thoughts are on the market overall. Here you go. You ready? This is big news. I mentioned I was probably going to do it Monday, and I'm going to be officially doing it today. Long term on the Dow, on the markets, and on equities, I am now switching officially from long-term bullish to neutral. Still neutral. And what does neutral mean exactly, Jeremy? Well, it doesn't mean that I'm always hunting for bearish trades. Obviously, some bearish trades are fun when they happen, like the last few days. And a lot of volume is coming in. I entirely anticipate a little bit of a retest, maybe some part next 2 weeks. And then I do think we actually could make it back down on the DIA to 152.82 at some point. This is the ETF that tracks the Dow Jones. So if you ever wondered, hey, how do I trade the Dow Jones? Well, this is how. So what does neutral mean exactly? Well, neutral means that I'm going to stop saying all the time, buy the bounce, buy the dips. It's been working very well just up until recently, which is, hey, that's totally cool. It's going to happen. That's what stops are for. So instead of saying buy the bounce, buy the dips, it's going to be buy at really long-term supports and sell at really strong resistances. So if the DIA makes it back down to 152.82, I would be a buyer at that level. And if the stock trades up, then I'd be selling. So buy low, sell high, or for an ulterior perspective, sell high, buy low. So if we get something like this for 2016, which we absolutely could, I'll be looking to get into some bearish, or at least more bearish and bullish trades up in the 181 area on the Dow Jones ETF, which is the DIA. So longer term, I am now officially neutral. So for my traders, again, who are younger, maybe have smaller accounts, they're just starting your IRAs, your 401ks at work, don't let this massively concern you. I mean, true story, if you're 20, 25, 30, and you have 401k IRAs and you're putting money all up in here, and let's just say the Dow does this, okay? Even if it does that, I wouldn't even freak out about it that much, right? If you're still young, buy low, right? It's really have a lot of cash. You'll be making more money, hopefully, in 3, 4, 5 years, and you can put a lot more into your 401k when the market is low. Here's something that I do want to talk about. And the reason I don't talk about this very much is because there's a lot of companies out there who love scare tactics. They do what I call fear advertising or fear marketing. You only hear about these companies. Usually they only send out videos or articles or blogs or, have trials or whatever when the market is in a bearish correction or when something's going on, because they're saying, hey, market's going to fall, market's going to fall, market's going to fall. And I'm not saying that that's not going to happen. I'm not saying the market will not fall. In fact, what you're about to hear is that exact statement. I'm just here to say that real life trading, we don't like those principles. I want to teach people, hey, you can trade the markets regardless of what happens. And I want to teach you how to be a real life trader, how to be someone who can create a trading plan, who can follow it, who can be consistent, who can be disciplined. We don't want to use scare tactics to sell classes because we don't sell classes. All of our classes are free. So I just kind of teach it how it is. So regardless, here's something that I don't talk about very often because I don't want to scare people. That's not my motif, if you will. But the market will have a drop. And when it does, and I'm not talking about drop like this. This is kids play, what's happening right now. Okay, think about what's happening in China. A lot of people don't know about what's happening in China, but I'll give you a really quick breakdown. China has dropped just this week, I believe, 13% or more in value. They literally opened their market, and in 15 minutes, I think this was yesterday if I'm not mistaken, days kind of blended together right now, in 15 minutes, no, this was the day before yesterday in China, whatever, 15 minutes, the market sold off so fast that they shut down the markets in China. 15 minutes, they closed markets and trading in China. That's huge, guys. It's a big deal. Now, think about this for just a moment. Think about debt. Think about how much debt America has, how much debt China has, Japan, Russia, Brazil, Argentina, Paraguay, Portugal, Spain, Germany, Italy, Greece, and you factor in all of the debt, which I think I read somewhere in the vicinity of $173,000. Trillion. $173 trillion. Okay? Countries have been using their own money to prop up the stock market, which is called quantitative easing, since really about 2010, 2011, and they have been using their own money to do so. They've been printing money, especially the U.S., because we have a fiat currency that's not backed by anything. We can just make as much as we want, and it's going to be an issue at some point. At some point, it will become an issue. Think about, for a moment, if you will, the housing crisis of 2007, 2008, when, credit default swaps and housing mortgages and loans were all just horrendous and no one was backing up anything. And instead of making that person's or personal debt that they couldn't pay back their houses, make that the government's. The government's not being able to pay back their debts. Yep. It's going to happen. I'm not saying it's going to happen in 2016, but it's coming. It might be 4 to 5 years from now. It might be 40 years from now. But it is going to be a cataclysmic bearish event like you've never seen before. And I'm not saying it's going to happen in one day. I'm not saying it's going to happen in a week. But there will be selling that makes the selling that's happening right now look like child's play. Could it be 2016? Maybe. What would I need to see for it to be 2016? I would need to see this. Boom, boom, boom. Yum, 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 yum. Blah, that's what I would need to see. Which looks a lot like 2007 if I were to draw these colors really quick for you. Boom, boom, boom. Sideways movement. Right? Here's the break in blue. Here's the retest in red. And there's the cataclysmic failure. We have a lot farther to go than we did in 2007. We're higher. We have more traders. We have faster internets. We have more people in markets. We have more funds. We have more ETFs. It's going to be insane when it happens. There are going to be some people who are going to be prepared for it. I just watched a movie called The Big Short. If you haven't gotten a chance to see it, it's absolutely phenomenal. If you're a stock market trading nerd like myself, it's great. Not really meant for children. It is rated R. Just throwing that out there. Great film, though. Loved it. Awesome. It's incredible. I'm not going to self-promote right now, but I will just drop this little thing in here. If this happens in the market, I'll be in The Big Short #2. When they make that movie, I'll be there. Right? Maybe some of you guys will be there with me, but it's going to happen. So whenever it happens, again, 4 years, 40 years, doesn't matter. The debt issue of the world will become a thing. It will be a factor, not to mention Social Security, that whole debacle, not to mention the student loan crisis that's going on. There's a lot of things out there. Debt is overtaking the world, not just America. So, a side note from that. Until that happens, I'm going to continue to be neutral or bullish. Right? Markets do go up more than they go down. And true story, even if it happens, this could happen. We could trade back down to here, and then all is well again. We could bounce, and we're back to normal, and everything is fine. But unfortunately, just a lot of things happen right there. Back in 2007, there was a statistic that for every 1% increase in unemployment, there are 10,000 deaths in America, which is, obviously horrendous. And I do not want this to happen, and I'm hoping that it doesn't happen. But if we're right, if a lot of these things are shaping up, it's going to be a really, really big deal if and when it does occur. So, throwing all that scare tactic away, I would say it is 2016. If you're asking yourself, when would be a really good time to learn how to trade this or learn how to protect yourself? It doesn't bother me if you don't want to make insane money on the way down. Just protect yourself. Don't lose tons, right? Don't absolutely just get your mutual funds and hedge funds, or IRAs or whatever, obliterated. There was, I think, $73 trillion lost in 2007 or something like that. Just an outrageous amount of money from hedge funds and mutual funds and IRAs and investments. It's going to be even a bigger number if it happens in 2016, 2017, whenever it may happen. Just learn how to protect yourself. There are a lot of companies out there who have free trials. There are a lot of companies out there that have free subscriptions. Real life trading is just free. If you hop over anytime to reallifetrading.com, we have articles, we have videos, and we have education that can teach you how to protect yourself, how to mitigate your risk, and how to understand what to do. If you're on YouTube right now, make sure to subscribe to us. Here's youtube.com. We post these 3 times a day, all the time. We have the channel here. You can click on the Real Life Trading channel. And we have almost 2,000 subscribers. We have a really solid playlist of a packed full of great videos. If you ever want to know a strategy, I would suggest typing it into YouTube. Calendar, spreads, real life trading. Whatever the strategy that you want to learn, type it in and then type in real life trading in YouTube. And there's a very good chance that's going to come up right there. And they'll probably be the number one searched or the number one video on YouTube because, well, our videos are awesome. So anyway, throwing that out there. I mentioned about the Apple video getting 3,000 views in the thing that you just watched a moment ago. I appreciate you guys.
Hey everyone, I don't want to do...
It's at 5,000 views apparently right now. 58 up likes. You guys are hilarious. But I appreciate you sharing the videos. It was a horrible experience, but anyway, that's it. So that's my big picture perspective on the markets. My big viewpoint is changing to neutral. What are we going to do in the short term to neutral, short term to medium term, if you will? Well, let's talk about the DIA and the Dow Jones. Agreed. Monday and Tuesday, I was like, guys, we're here. This is the bounce. If it does not bounce, if we do not bounce, if we gap down and open below the low of Monday, we are done. Said that verbatim. Go back and check the recording. Gap down below Monday's low, trapping people, including myself. A lot of people having to flip positions, and today doesn't help. We're getting some bearish candles. We gapped up. We traded back down. Right now, we're battling this little gap action over here on the DIA. This is a retest gap, and we are retesting. Moving averages are bearish. Volume is picking up. I'm not saying we're going to go to zero on the Dow, but I am bearish short-term to neutral until we make it to either 160 or 153. Either one I'm fine with, but really we're going to trade likely into both of those. That analysis is pretty much the same for all the indices. SPY, you can see this is one of my targets on a shorter-term trade. We're already down 0.31% on the day from yesterday's close. So this is probably going to be the worst 5-day open in any year ever, which is fine. No worries. It's trading down. I'm looking to buy longer term there. And again, if we don't bounce, we'll have bigger issues. But let's talk about the IWM, and then I'm going to talk about a warning signal that we noticed a while ago. Here's the Russell. The Russell down another percent. Here is a support. It traded down to, and it did not bounce off of that support. So likely, I don't know if the SPY will or not, but we'll see what's going on. There is something called Dow theory out there, and Dow theory talks about that the averages of the Dow transports and industrials should confirm each other. Here was a warning signal. Mentioned this in a few videos in the past. December 17th was a very big day for transports. Huge volume, close below support, and it was a perfect Marubozu candle. What a Marubozu candle means is that when the stock market opened, it immediately began selling, and it did not stop until the close of the day. A lot of selling pressure on IYT. You can see that we've been bearish for a little bit on that. And I mentioned if we do not close above that candle in the next month, it's a pretty dang bearish signal. We've broken a long-term trend line, ladies and gentlemen, on the transportational index. These indexes or indices are diverging from the industrials. Here's the long-term viewpoint of your transportational IYT. Goes all the way back from, well, I'll show you guys a monthly chart. Let me do a monthly chart just to show you what I'm looking at. And here's all the way back from 2009. So this is a trend line. This is the angle that's been holding up the transports. And even though as cheap as oil is right now, transports are still getting hit really hard. And that's a very, very interesting dichotomy. So on the weekly chart, we have what I refer to as a retest gap. If you're thinking to yourself, Jeremy, do I go bearish now? No. If you're not bearish now, you're missing it. You're chasing it. Wait for a retest. A retest is going to look a lot like what today looked like. A gap up or some trades higher and then anticipation of a rollover. That's what we're experiencing and expecting sometime maybe next week or the week after. Keep your eyes on the IYT. This is a beautiful flag pattern right here. Flag pattern. This is a retest gap on the weekly chart. We're closing below this candle. Potentially, we still got some time left in the market, but more than likely we will. And next week or the week after, I'm going to look for some retests, and then I'm going to look for some possible rollovers. Next week begins earnings. Oh, man, what a time for the market, ladies and gentlemen. I mean, we have huge sell-offs. Earnings is coming up. If you want to educate yourself, awesome. Hop over to Real Life Trading. It's all entirely for free. If you want to hop into the trading room and learn how real life traders day trade for a living, or if you want to learn, of course, a little more about swing trades or longer term perspective, you can always hop over to reallifetrading.com, click on the live room tabs, and check it out right here. There's a 7-day money back guarantee on anything that you purchase. There's only 2 things to purchase. It's either this room or this room. Get it if you're not in it already. We won't be able to accept everybody, but if you sign up, we'll see. And, it's a packed room, and we keep it exclusive. We'll see. The next free week of the room will be sometime in, I don't know, maybe June or July or August, 6 months away from now, just to get you guys taste buds and mouth watering for some more action in trading. But we are up nicely so far this week. And again, just keeping an eye on the overall markets. Let's look at Apple. Apple today did gap up. Again, it was up with the market. But this is the daily chart of Apple. Got a nice little black candle today. So for anyone who got a chance to unravel the 105, 100 bull put spread, you're doing just fine. If you're still in, awesome. Looking for some trades down into 93 or 92 on Apple, looking pretty bearish, breaking below. So this is that's been our analysis on Apple for a while. Short the pullbacks, bearish confirmed, target low 90s on Apple. Ladies and gentlemen, I think that's a pretty solid perspective, but I'm going to give you a little bit more. Let's talk about some of the swing trades that we are in, and let me bring those over from the trading journal that you guys will all get access to when you sign up for Real Life Trading. And here's your swing trades. So we got stopped out on Lulu today. Let me close that. So we were in a bullish trade on Lulu. So here's ticker symbol LU. Got stopped out, lost on that. Really solid risk mitigation because yesterday we gapped down below the entry. So we got a chance to buy in yesterday at the open, which was 54, and got stopped out at 53.77. So only a 0.6 R loss on Lulu. Got stopped out on Ruby Tuesday a long time ago on a bullish trade. Believe it or not, the rest are bearish. Ticker symbol CMI. We've been in this trade since the 1st of December and staying in because we're bosses. Next target on Cummings is $82.11. The stop right now is at $90.49. Nice little bearish candle coming in today. A little bit of a bearish engulfing candle that likely should continue. Fossil, ticker symbol FOSL, is down 5.14%. Hit target 1 yesterday. Next target on Fossil for anyone in that particular trade is $23.64. It's going to take a little bit of time to get down there. Stop is at break even. At some point, expect a little bit of something like this and then maybe something like that. Mid-February is the next earnings date, so we'll probably hang in that one until we need to exit. Mosaic, ticker symbol MOS. This was the trade setup that I did on Trader Planet, which is a website that I write for and post videos for on pretty often. Hit target 1 yesterday. Next target is $22.79. If you are in this particular trade, posted this one everywhere on the internet. You can place your stop at break even, which is $29.89. Got into XLE. Triggered this one in on Energy Wednesday in the afternoon swing trading room based on this beautiful candle that occurred just a few days ago on Wednesday. This was a new black crow. This was a flag pattern. And my target on XLE, I believe, is down here at 54. And the reason I say I believe is because it's the 200 simple moving average on a monthly chart, which I don't use very often, but we're running out of long-term moving averages to find on a lot of stocks. Yep, there it is. So there's our target. I'm going to try to trade it bearish until then, which will likely pause and kind of bounce around for just a little bit. GD, for those of you watching this video, you might still have a chance to get into this one on ticker symbol GD. Getting in bearish on General Dynamics. The chart didn't save. TradingView does that sometimes. Bearish entry pretty much is a retest of this support. It closed below support yesterday, gapped down with a bearish gap and go yesterday. It's retesting today, might also retest tomorrow. This is a limit sell order on ticker symbol GD, meaning you're trying to get in on the pullback. 132 by 13409, something like that. It's very close, but it's in the chat pane. There it is. And O'Reilly. So O'Reilly Auto Parts has not triggered yet. Here's ticker symbol ORLY, and it might not. Let me see the trigger on O'Reilly. That chart didn't save either. 243.30. No, I didn't think it did. It was right about here. It's battling the 200 simple moving average very nicely. Some solid gaps on O'Reilly. If the trade continues, and specifically if it closes below the low of today on O'Reilly Auto Parts, I'm not bullish specifically. We talked about this one in Transportation Thursday yesterday. So those are the sectors that we look at in the afternoon swing trading room. Merchant Monday, Tech Giant Tuesday, Energy Wednesday, Transportation Thursday, and Finance Friday. Ladies and gentlemen, real life trading is changing lives. We're enriching lives. That's our mission. Thank you so much for watching this stock review. If you have any questions anytime, please feel free to reach out to anyone here at Real Life Trading. You can email me, Twitter, Facebook, LinkedIn, text, homing pigeons, however your form of communication, I'll be there for you. That's a nice song. I'll be there for you. I'll see you later, and until next time, love life, live life, and trade it. See ya.